The year has not gone exactly the way we would have planned. I believe we have 22 catastrophes this year. So it has been a very heavy catastrophe year for us and for the industry. The bottom line is through September, our combined ratio is at a 105.9, which is not a combined ratio that we're typically used to. As everyone knows, we're usually well into the mid to upper 90s. But when we look at that compared to the rest of the industry is forecast to be over a 110 this year. There's been a lot of very, very tough numbers that many of our competitors have put out. Our casualty loss ratio is actually right on its peg. And the difference is essentially the homeowners loss ratio and to a lesser extent BOP loss ratio. We do expect to, unless any other major events take place, we do expect to finish this year with a combined ratio probably somewhere in the 103 range. From a return on equity standpoint, we do expect that to look fairly decent this year. We have every expectation that we'll hit our investment plan. Through September, we were behind, but we've made a lot of that up already in October. We do expect that our ROE will end the year somewhere around probably 7% or so. Again, not up to our historic standards, but something that's pretty good when you compare it to industry standards. Hurricane Irene, of course, hit in late August, and we, I believe to date, have over 3,400 claims that we've received from Irene, probably somewhere it'll settle out in the $15–16 million range or so. What was interesting was the Monday after the hurricane, our claims department received as many claims that particular Monday in one day as they typically average in an entire month. So that kind of puts into context the magnitude of the claims. What Hurricane Irene really was a storm with a lot of claims, very, very high frequency, but a fairly low severity for a hurricane. The important thing, though, is how we reacted to the event. And as we've heard all year from our customers on various events, the response from the Massachusetts tornado that came through and at the listening tours, we got tremendous feedback from our customers saying our company handled those claims really the best out of anyone in the marketplace. We're hearing similar feedback with Hurricane Irene. So I would like to, again, just applaud and thank our claims group for pulling together and taking care of our customers in such a magnificent way. Very well done. Premium growth this year has been a little disappointing. Our direct growth, which is our personal and commercial lines business that comes through our independent agent customers, has been a little bit behind plan. It's still positive. It's a little over 1%, and we expect that to accelerate as we head towards the end of the year. But we're still facing a pretty soft market environment in most of our states. Our net growth will be a little bit higher because our assumed reinsurance operations are well above their premium plan. So our net growth will be somewhere probably in the 3% range or so. From the product line standpoint, starting with commercial lines, in spite of all the catastrophes this year, commercial lines we do expect to end pretty much around its plan. Through September, the combined ratio is a 97.9, but our projection there is for it to be somewhere in the 96 range, maybe better. So a very satisfying result for the commercial lines operation. Personal lines, of course, has the homeowners line, which has taken the brunt of the catastrophes this year. And the projection for personal lines is probably be somewhere in the 118 range. Our other product lines, bonds through 9 months, is actually below 100 at 98.5. And we'll see if bonds can stay there by year end. But we do expect it to be somewhere in that range between the 98.5 to 100-ish. And then the assumed reinsurance operation is a little higher than we had expected. It's sitting at about a 103 or so through September. Of course, we're assuming reinsurance on business that also has been subject to catastrophes this year, so it's probably going to be a little bit above its target as well. From a regional standpoint, the region that's taken the brunt of the storms this year, the winter storms, some of the tornadoes, and of course Hurricane Irene, unfortunately, is New England. So New England's going to have a combined ratio that is well above its typical target, but understandable, again, considering the number of storms. The Northeast region did not have the same level of catastrophe activity this year, and through 9 months is actually sitting at a very satisfying result at a 98.2, and we expect that to continue to improve as the year goes on. So well done to Mark Berger and his team. And Mark, thank you for not saying anything about the epic collapse of the Red Sox. I know I got you in the last video. The Southeast region, particularly Florida. Florida is performing as we would expect it to in a non-hurricane year. The combined ratio there is sitting somewhere around an 86. The rest of the states, unfortunately, have also been hit by some of the catastrophes this year. And then the Midwest region, which is located in Indianapolis, but of course encompasses many of our states, some of which are not in the Midwest, including some of our western states. There is also some storm activity that we've had there, so the combined ratio will be higher than we had expected.